Hi, good afternoon, everyone. Hope everyone's doing well. I'm making this little short video, despite being on leave, because people asking, how's the interest rate cut happening tonight? What's it going to happen? So a few questions. So I just thought I'll do a video to just answer any questions as a whole. All right. Before I begin, also just a simple disclaimer: whatever I'm sharing here is just my personal opinion. It does not represent Philip. All right. Whatever I share here is also not for you all to act as a buy or sell call. It's really just a bit more educational purpose, and hopefully it can help in your investment journey. Okay, so tonight, the Fed will meet for the second night. All right, there's almost 100% chance that there'll be a rate cut. All right, how many percent? That's really harder to say, but most likely we're going to get about 25 basis point, all right, or 0.25% cut in the interest rates. Okay, you can see about 96% of the members have felt that it's probably going to cut tonight. So the decision is around 2 a.m. Thursday morning. So if you're still up for some reason, you are able to see it, and good for you. All right. The reason is, of course, why cut? Why are they cutting now? Okay, firstly, is you can see that it's probably the job data. We can see it's under pressure because the unemployment has been going up. The jobless claim has been moving up. So recently, we've seen quite bad jobs data also. And secondly, also, there's probably some political calling for easing. Like you've seen on the news that Donald Trump always has been asking Powell to cut, and he's been saying that it's too slow to cut. All right. One thing people also ask whether is it in recession or what. It also really depends on how fast the Fed cuts the rate. All right. In the gray bar over here, we can see that's where a recession is. So if Fed were to keep slamming the rate, or if they were to cut 50 basis points instead of 25, and the reason he says is because we're going into a recession, or things looking not so rosy, all right, then we could see actually the market moving into correction territory, or even to recession, right? You can see over here in 2000, the dot-com, okay, where the rates were slammed down pretty fast. Even around here also, when it slammed down pretty fast, and then COVID also, where it slammed down when it cut pretty fast, that's where the market is actually not comfortable with it, because the reason why they have to cut so fast, so furious, is probably because they're into something bad, and market doesn't like that. All right, so we also have to hear what Powell says when he cuts the rates tonight. Okay, but so what happens when there's a pause? We know that the last rate cut has been a while. Okay, so right now they're gonna, hopefully tonight they're gonna get our rate cut. Okay, so what happened? The S&P returns after the Fed waits between 5 to 12 months to cut. All right, the next month we can see there's going to be some volatility. All right, it's not all the time that it's going to be green. Okay, the next 3 months there's still going to be some volatility, but what we see in the next year is generally positive. All right, you can see the year later after the Fed cuts, we can see it being green. All right, so for the long-term investors, I would say I wouldn't be too worried. I would just continue holding on to the fundamentally strong stock. In fact, for my clients under me, we're just still holding, riding out, and enjoying this whole bull run. All right. So data compiled, right, from Carlson Research, 10 out of 11 of such instances since 1970 show that the index actually finished higher 1 year later, average gain about 13%. So if you're a long-term investor, I wouldn't be too worried. And as you're a trader, a short-term trader, then yeah, you can actually take advantage of the volatility. Okay, so the short-term moves were mixed, so around 1.5 return negative, mid-term, long-term show positive. So like I said, if you're a short-term trader, this is your chance also to either go long or short, all right, to take chance of that volatility. Okay, and what happens when they actually cut the rate at the top? As right now, we can see S&P is making new high, all-time high. All right, we can see actually about 52% you'll go higher in the next month, right? So that means about 48% actually there will be some pullback. Okay, so for the short term, right, don't be too surprised if there's actually a pullback. All right, don't be scared. There might be news out there, might tell you the worst crash, this is the worst recession we're gonna have, etc., etc. I love those headlines. In fact, when those comes out, I think as a client, you know what to do already. We've been going through this many times, and we can see market continues to make all-time high. Even the next 3 months, we see some volatility, but in the next year, we can see 100% of the time is green. All right. So right, we're actually right at the top right now, around the top, as you can see, this was actually the Jackson Hole meeting where Powell actually did give some hint of a change in monetary position. So we can see the market actually rallied about 3% already. It could have already priced in this tonight's cut. All right. So if after tonight's cut, if we see a drop, I wouldn't be surprised. I would in fact take the chance to add on to good quality companies. So if you have missed this whole bull run with the pullback, hopefully we get a pullback. All right, then that's where your opportunity should come in. Of course, if you're unclear, if you're unsure, always just reach out. We're here, me and Roy are here. If you need any help, just reach out. Of course, we want to look at the more totality as a holistic portfolio. All right, with that, I will end my sharing, and hopefully, if you've got any questions, feel free to ask. And so we will talk more in future. We're going to have another seminar, another webinar when the rate cut, when the rate goes down, your mortgage loans also. All right, we'll be covering that more in depth. So if you have any questions, if you feel free to just ask, and we'll be happy to answer. All right, see you in our next video or webinar. Take care, everyone. Bye.